Hello, history enthusiasts. Welcome to another deep dive into the annals of British history. Today, we're diving into the captivating and intricate history of death duties in the UK, a topic that has shaped the financial landscape of the nation. Buckle up as we journey through time, uncovering the twists and turns of this fascinating tax and how it has evolved over the centuries. Our story begins in 1796, amidst the turmoil of the Napoleonic Wars, a period of great upheaval and financial strain for Britain. Britain, facing mounting financial pressure and the need to fund its military campaigns, sought innovative ways to bolster its coffers. Enter the legacy duty, a tax on inheritances received by non-linear descendants, introduced by William Pitt the Younger. This marked the birth of death duties in Britain, a system that would evolve dramatically over the centuries, affecting countless families and estates. The legacy duty was a novel concept for its time, aiming to redistribute wealth and support the nation's financial needs. It targeted the transfer of wealth upon death, aiming to generate revenue for the war effort, a crucial need during the Napoleonic Wars. While initially met with resistance from the public, the tax gradually gained acceptance as a necessary measure for national stability and security. This new tax, however, was just the beginning of a long and complex journey. Little did people know that it would lay the groundwork for a complex system that would touch the lives of generations to come, influencing the economic and social fabric of Britain. As the 19th century progressed, so too did the reach of death duties. In 1853, a significant development occurred with the introduction of succession duty. This expanded the tax to include inheritances passed down through lineal descendants, such as children and grandchildren. The rationale behind this expansion was twofold. Firstly, it aimed to create a more equitable system by taxing inheritances within families. Secondly, it sought to generate additional revenue for the government, which was grappling with the costs of industrialization and social reform. The introduction of succession duty marked a turning point in the history of death duties. It solidified the concept of taxing inherited wealth, paving the way for further developments in the 20th century. Fast forward to 1975, and we witness another major shift in the landscape of death duties. The socio-economic climate of the UK was undergoing significant changes, and the government sought to address these evolving challenges. The Labour government under Harold Wilson introduced the Capital Transfer Tax, or CTT, marking a pivotal moment in the nation's fiscal policy. This new tax replaced the existing estate duty with a broader approach, encompassing lifetime gifts as well as inheritances. It aimed to create a more comprehensive system that would be harder to evade. The CTT was designed to address concerns about wealth inequality and tax avoidance. By targeting both lifetime gifts and inheritances, it sought to create a fairer distribution of wealth. By taxing lifetime gifts, the government aimed to prevent individuals from circumventing inheritance tax by simply transferring assets before death. This was seen as a necessary step to close loopholes in the existing system. This move, however, was met with mixed reactions. Public opinion was divided, with some viewing it as a step towards greater fairness, while others saw it as an overreach. While some lauded the CTT as a progressive measure, others criticised it for its complexity and potential to stifle entrepreneurship. Business leaders were particularly vocal about the potential negative impacts on economic growth. The debate surrounding death duties was far from over. It continued to spark discussions and controversies, reflecting the ongoing struggle to balance fairness and economic vitality. Section 4. Inheritance Tax, the Modern System. In 1986, the Conservative government under Margaret Thatcher implemented yet another significant change. The capital transfer tax was abolished and replaced with the inheritance tax system, which remains in effect today. Inheritance tax retained the core principles of its predecessors, but introduced several key modifications. It established a single nil rate band, simplifying the tax calculation process. Additionally, it exempted certain assets, such as business property and agricultural land, from inheritance tax, aiming to promote economic growth. The introduction of inheritance tax marked the culmination of centuries of evolution in death duty legislation. However, despite undergoing numerous revisions, inheritance tax continues to be a subject of debate and controversy. Section 5. Public discontent with inheritance tax, a question of fairness. Inheritance tax, despite its long history, remains a contentious issue in the UK. It has been a subject of debate for decades, with strong opinions on both sides. Many argue that it is inherently unfair, penalising individuals for wanting to pass on their hard-earned wealth to their loved ones. They believe that families should be able to retain their assets without the burden of additional taxes. One of the primary criticisms levelled against inheritance tax is that it amounts to double taxation. This means that the same money is taxed twice, which many see as an unjust practice. Individuals pay income tax and capital gains tax throughout their working lives. These taxes are already a significant financial burden for many. Forcing them to pay tax again on their remaining assets upon death is seen by many as unjust. This additional tax can create financial strain during an already difficult time for families. Furthermore, the current inheritance tax threshold, while subject to periodic adjustments, often fails to keep pace with rising property prices. This discrepancy can lead to unexpected tax liabilities. This has led to accusations that inheritance tax is increasingly becoming a tax on the middle class, dragging families who would not consider themselves wealthy into its net. As property values rise, more families find themselves affected by this tax, sparking further debate about its fairness and impact on society.